Hey Legacy Traders, it's Tim Key with Option Legacy, helping you build a legacy through trading. Hey, I wanted to take a few moments and share with you guys my pre-market routine. So every morning before I get into the trades and I get the day going, I'm doing these few steps. And so as a new trader, you might say, hey, what are those steps? How do you do it? Well, that's what this video is all about. So I'm going to be sharing with you guys a few different web pages / resources. Those will be in a link available with this video, so don't worry about that. But let's go ahead and get over into what I do. So every morning I'm doing a few things. I'm definitely checking what's called the futures. So the way that I check the futures is I just go to money.cnn / and I'll make this link available. I just have it stored right here, pre-market, and I know that that's what it is. And so here I'm checking the futures, boop, 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 and I'm seeing what's the general direction of the market going. So futures are an indicator, can be an indicator of pre-market movement. So whenever the market opens, and mind you, this is always after hours. It can give you an indicator of what kind of flavor we're gonna have, a bullish or a bearish day. So once I see, is it green or is it red? Is it really red? Is it really green? I'm then coming down here and I'm checking world markets. So you can Google when these markets open. I know that they open at 5:30 and like 6:30, and then these open at like 12 and 1, something like that. And so you can check, and again, we're a world economy, so we want to see what the general major markets are doing, and whenever we can see if there's a common theme, like in this case there's more red than there is green, that can also be an indicator of what direction the market's going. The third thing that I'm doing is I'm looking at the bond interest rate. So the previous yield, the one that I mainly look at is this 30-year treasury, and I'm looking at its previous rate, 3.07, and its yield currently. Is this going up or down? Whenever the bonds increase, the stock market generally decreases. That's because people say the stocks are too risky and they put their money over in the bonds, and vice versa. When these things decrease, they say bonds don't get enough return on investment, so they put their money in equities or in stocks so that they can get a higher return on investment. So if bonds go up, this yield today is higher than yield previously, then we can expect it can be an indicator of a bearish market. So that's what I use here. Next page that I go to is this guy. It's also a CNN. It's their fear and greed indicator or index. This can be an indicator of what basically is it going to be volatile. I found that just because it's fearful doesn't mean that it's going down, although fearful more often than not means it's going down, and greed doesn't mean that it's necessarily going up. Yeah, that's probably, let me clarify that. So just because it's fearful really low doesn't mean that it's going to be a down day. Just means it's going to be volatile. It's going to go ka, 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 ka. But if it's extreme greed, it's almost always going to be this just huge incline. So I'm just looking at what's this current number based off its previous number. And whenever I first got started, I would read all these things down here. I don't anymore, but you absolutely can. And I'll make this link available too. Next thing that I'm doing is the third and final webpage I go to is Market Watch. You will see this Fox Business Markets, and I'll sometimes come here. However, they haven't been maintaining their website very well, so it's not very relevant or up to date. So Market Watch, and mind you, disclaimer, Market Watch is largely speculative. What do I mean by that? It's on the outside looking in. It's, hey, what's going to happen next? It's kind of the drama of the stock market, and you'll see there in the headlines that it feels like you almost pick up Esquire magazine or something for the stock market. So it's got a bunch of kind of drama. Amazon ignores FDA for more than a decade. What the, So anyways, but I'm just checking here. I'm looking at major headlines. Is there any headline here that could possibly impact one of my positions that I have? And if it is, I just might read it, see if there's any insight that I could have. But I trade mostly off of technical analysis and not fundamental analysis, which is what these articles would be. You'll also see here that they do have the futures as well. I found that these futures are not always populated, so it's kind of hit and miss. So whereas CNN Money most of the time it's there and accurate. So that's the website portion of it. And again, those links I'll make available to you. What do I do next? Now I go into my portfolio and I'm looking at activity, like my good till cancel, my working orders, and I'm seeing, is there anything that I need to do for today? Is there anything urgent? Is there a trade that I need to give more focus as the market opens? So let's go over to my portfolio and we'll check that out. So this is my current portfolio. These are trades that I have on live. You can't see the strikes, and I won't expand them just because this is for educational purposes. So what I'm doing is all of these trades have these little yellow ribbon or yellow triangle up here, mean they have a good till canceled or a working order to try to capture profit. So IWN, for instance, is a credit spread, bear call spread, in the May expiration month, and look, it's got this working order down here. So in TastyWorks, you can do this. You can highlight, and then you can hit close for profit, and that's all I've done here. So I won't go into why or how much I close for each one, things like that, but you'll see then it automatically creates this order. So to see all of those working orders for all of my positions, I come over here, and I'm looking at two things. I'm looking at, this is the current market price of the position. So I have a position on in Tesla. It's represented over here. This is the current market price, and this is how much I'm trying to close this thing out. I want to see if any of these are close. 13, so this is kind of close. It's about 13 cents off. I might expect FXI to trigger out today. 25 and 37 cents, that's kind of close. That could happen in a day. 10 and 41, probably not. This is a long position. I have a market stop. It's far away from that market stop. This could happen, XLF. And so I'm just prepping myself for the expected move of today. And what will happen, let's use our closest one. Let me see which one. Okay, I'll give you two examples. So I'm looking at IWM. You can see over here, it's a call spread, bear call spread. So what I need for IWM is for it to continue to move downward. So if we opened up in the markets and IWM, the Russell 2000 ETF, if it continued to move down, I could come in here and possibly manipulate this, take off this good till cancel order, and maybe instead of paying 25 bucks to give it back, I could pay 22. So I can maybe watch it and manipulate it a little bit more. That's if I want to be active. Now let's go down over here to XL. Where is it? XLF. Yeah, this one could happen. It's about 25 cents. So this one, you'll see it is an iron butterfly, or it's a cousin of an iron condor. So what I need, the short positions are the 27 strikes. What I would need to watch is in XLF, would it come down to $27 flat, which it's about 17 cents away. So if it came down to about 27 flat, again, if I wanted to be more active, I could come in here and I could watch this thing and exit right on the money at 27 flat, and that would give me my biggest profit possible for this position. That's if I want to be active. If I don't want to be active, I'm just gonna go in there, look at those close market price and my profit target exit price, and see if they're close. And if I don't want to be active, all I'm going to do is I'm going to take mental note and say, hey Tim, you should expect maybe 1 to 3 trades to trigger off for a profit for the day. So guys, that's my literal step-by-step that I do. I can do this either after markets close. So markets close here on the West Coast at 1:30 p.m. So I might come in here at like 5:30, 6, 7, 8 p.m. maybe right before I go to sleep, or I can do it right before market opens. So markets open here at 6:30 a.m. So I might wake up at 6 and I might just pull out my phone. I've got those bookmarked on my phone, and I can do my portfolio on my app, the TastyWorks app, and I might just do a quick scan through of those. So I hope this adds value to you. You're going to have to define your own pre-market routine, but I do encourage you to take a few actions to just give yourself a little bit of the ability of being prepared mentally, because that will help you to respond versus react when and if things happen in your portfolio that you expect or don't expect. You have a game plan for it, and you re-solidify that with every trading day. All right guys, till next time, see you on the other side.